So in this episode, I'm going to share with you how can you grow your Forex trading account in the new year of 2019. We're going to talk about that today coming up next. So if you're watching this in January, Happy New Year! And with the new year, I'm going to give you a new present, which is a 6-step plan for you to really grow your trading account. And if you follow this 6-step plan step by step with discipline, you're going to be on the right track. So the first step is keep up with the Kardashians. Keep up with other markets, in particular the stock market. Okay, why is that? If you're watching this in January, you know that in the past few days, dollar yen made a massive move. Now here's the thing, because Apple forecasted a lower revenue for the quarter, because initially the forecasted number was about 93 billion and now they revised it downwards to about 84 billion. Then investors start to panic. Apple has a lot of production that's based in China, a lot of factories based in China. And because of the US-China trade war issues, investors start to become pessimistic. And as a result, dollar yen plummeted more than 300 pips within a few minutes. Then a lot of forex traders got taken aback and then be like, what just happened? In 2019, in this century, the stock market and forex market is closely interlinked to each other. You cannot afford to completely ignore the stock market anymore. So if you've been in this channel for a long time already, you know that I teach stocks on this channel too. I always preach that you shouldn't just focus on one asset class. When you've mastered one asset class, let's say Forex, you need to add stocks, you need to add ETFs, you need to add bonds. Have a good balance for your portfolio. So that doesn't mean that you need to monitor the stock market every single day. What I'm saying is that you cannot completely ignore it from Monday to Friday. So if you're a beginner in the stock market, you have no knowledge at all about the stock market, feel free to check out my videos on stock investing for beginners. You can have the best system for 2019. But if you fail to take into account the intermarket risks, the intermarket relations, you're gonna get killed. So speaking of risk, comes the second step. Apply more stringent risk management. Now here's the thing, recently, I've had some people commenting my videos and then they'll be like, you know Karen, me and my tribe don't trade with stop loss because we are all men. I'm like, why? Then he said, Karen, because you know why? Real men don't trade with stop loss. I'm like, try doing that if you operate a hedge fund. How do you explain to your investors when they ask you, why do you lose all my money? And then you'll be like, because our company philosophy is real men don't trade with stop loss. All the top hedge fund managers in the world, they will always attribute their secret to their success with risk control, stringent risk management. Here's one very important thing. If you take care of the downside, the profit will take care of itself. But if all you do is focus on your profit, the risk wouldn't take care of itself. In this century, market environments have changed. When 30-40 years ago, investors, their average holding period is years. After 2008 recession, the whole entire market changed. Nowadays, the average holding period of investors is not years anymore. It's ranging from months to weeks. We are talking about the stock market right here, okay? Where people used to say, buy and hold is the best thing to do. Nowadays, buy and hold is almost dead. In fact, there's a book that's written about it. It's called Buy and Hold is Dead. Not to say that you shouldn't buy and hold, what I'm saying is that in this day and age, you need to practice better risk management as compared to last time. Because last time, a lot of people can just buy a good stock, close their eyes, after 10-20 years, take their money out, enjoy life. So of course, the first aspect that you need to ensure that it's taken care of is yourself. Then the second half of the battle involves your business partner, which is your broker. So in this day and age, where there are so many new brokers coming up, and in 2019, probably a lot more, you've got to make sure you pick the right broker. A lot of people, they pick the broker just based on one factor. Oh, it's because you give me low spread. When you pick a broker, you have to do the same amount of research as if you are picking a stock. Okay? Now for me to pick a stock, 3-4 years ago, I would do a 20-30 page report and spend 3 to 4 weeks just to evaluate one stock. That is the amount of research you need to put in. Because a lot of people, they analyze the markets properly, they spend time analyzing the stock, but then when it comes to picking a broker, they be like, anything, just anything, you know. As long as the commissions are low, as long as they treat me nice, as long as their website is nice, then it's all good. Now if you want to learn how to pick the right broker, I've already done a video on that. I'll give you a checklist on all the criteria you need to look at to pick the right broker. Go and check that video out. But still, don't take my word for it. Remember to do your research. I'd rather spend the whole entire week researching on a broker than risk getting my account just taken away just like that, just because the broker is not properly regulated. So once you have done all the foundation work, step 1, step 2, step 3, now comes the 4th step. And that is to study your 2018 trades. Now, if you tell me that you've been watching my channel for 1 year or more and you don't know what a trading journal is, I'm gonna be like, oh my god, what were you doing this whole entire year? Gambling? You've got to study your winning and losing trades. Both. Doesn't matter whether it's live trades, demo trades, backtest trades, you've got to study it. So that in 2019, you wouldn't repeat the stupid mistakes that you made last year. So that in 2019, you can start new, you can become a better trader as compared to last year. It's about improving every single year, every single month. Better yet, have a coach, have a mentor, tell you what you did right in 2018, what you did wrong in 2018, how can you improve on it. Look at your returns in 2018. Are you satisfied with it? Way too many traders, investors, they like to compare. So that's why my 5th step for you is stop comparing. What I mean is don't compare yourself with external forces. Because way too many traders, investors, they compare their returns with a benchmark. Let's say S&P 500. I'll tell you a very interesting thing, okay? Studies have found out that traders and investors who compare their performance with the benchmark with something external would perform worse as compared to somebody who compare their ROI with their previous year performance. Meaning they only compare with themselves. So if there's an option for you to compare internally, which is with yourself, or to compare externally, pick the first one. Because you progress faster, you progress better when all you do is compare with yourself. Now here's the thing, when you improve on yourself, beating the S&P 500 is a bonus. Beating your so-called trader friends, investor friends is a bonus. But when you compare with S&P 500, when you compare with all your trader friends, it wouldn't guarantee that you improve. Okay? Now in 2019, there's going to be tons of temptations for you to buy things, for you to buy flashy things, for you to buy a new LV bag. There's going to be new Air Jordan designs coming out. That's very tempting to withdraw all your trading profits. When it comes to achieving a long-term trading business and at the same time keep you happy, you need to achieve a balance. What do I mean by that? Meaning to step number 6, keep a portion of your profits and let it compound. And on the other hand, withdraw the other portion for you to reward yourself. By now, you already know the power of compounding returns, where you can grow your 5-figure account to 6-figure account. If you grow it consistently, the rich get richer is because they let their money make more money for them every single month, every single year. You don't want to waste your hard work by withdrawing all your profits and then spending on dumb shit that you don't really need. When you let your account compound, grow to a big account, next time you can reward yourself all you want. For now, just delay the gratification because it's going to be worth it. Okay, so with that, let me know down in the comment section below. How do you plan to grow your trading account in the year of 2019? I'll talk to you in the next episode. Bye.